All right, good morning, Alta Realty Group agents. This is Kevin Lauren. I'm the Director of Training and Marketing. And today we're going to be joined by Debbie Saccone from Clearview Mortgage. And she's going to be going through down payment assistance as well as closing cost assistance for your clients. So this will be a great webinar for all of us. And let me bring Debbie on the line so she can talk. Good morning, Debbie. How are you?
I'm fantastic. How are you?
Fantastic. It's great to have you back. It's been a while.
Yeah, thank you for having me.
For sure. So maybe just we have a lot of new agents on the line. So maybe just give us a brief overview of who you are, Debbie. Debbie's one of our top producing agents or loan officers with Clearview Mortgage, but give us a little brief background and then we can get into our presentation.
Oh gosh, in a nutshell, I have been doing loans for almost 30 years. It's what I've done my whole life. And, you know, basically my motto is, aside from Debbie Does Home Loans, that we make people's dreams come true. And that is one of the biggest reasons why I have done this one business. You would think, you know, after doing one thing like your whole life, you're going to get tired of it. But I really love what I do. Every day's different. And, you know, just to see the joy in people's lives when they first get their, you know, whatever home, the first home, or achieve a goal that they want to achieve is just a complete reward. So it's such a pleasure to be able to spend a little bit of time telling you what, not only about the down payment and closing cost assistance program, but Clearview Mortgage, we can pretty much do almost any loan. There's very few people that we can't help, or maybe we can give them a game plan and help them. But the down payment and closing cost assistance program, we actually have 3 different types or kinds. I'm going to talk about the CalHAFA program today. And so I'm hoping to, because I think the more programs that realtors know that we do, you're going to be able to help more clients. And what does that do for you? It brings more money in your, you know, more income in your life, to know that we can pretty much help anybody.
Well, that's 100% right, Debbie. That is such a good point, because, you know, we want our agents to know that the Clearview Mortgage team is a massive asset for you. So that's a huge point. Thank you. Totally.
You know, if you knew, and I'd love to do another class, because it's if you knew all the programs, all the types of financing that we do, it would literally blow you away. I've done many presentations with just a 2-page list of every kind of loan that we can do, and it really blows the agents away. Their minds start thinking, you know, the wheels start spinning, and it'll increase your income.
For sure. Debbie, would you like me to bring up that graphic that you sent me?
Yes.
Okay.
Yeah. And there's something else too, Kevin, if I may. After we go through some parts on that graphic, I would like to see if there's any way to, and you can even go in there and Google it, or you know, turn the screen over to me so that I could show people, like, how do you get interest rates for CalHAFA? How do you find that out? How do you find out what the income limitations are? So if we have some time, I just want to just kind of show everybody where you can get that.
Do you want me to just have you share your screen?
Yeah, sure.
Okay, let me promote you to panelist. It's a big deal. Okay, give me 1 sec. Okay, so now you should be able to share your screen, and you should see a green share screen button at the bottom of the Zoom screen. And I'll even stop my share just to make it easy. And Debbie, you are muted.
Okay, thank you for letting me know that.
No
I
problem.
I didn't even know that. Okay, so let's see if I thought I had it up there. Let's see. That's Zoom, but CalHFA.
Perfect.
Okay, now I wanted to show you, like, if you just go into Google, and I Googled CalHFA, all right? It's that simple. Anybody can access this website. So when we tell people, look, we don't control the rates with CalHFA, we don't. You click on CalHFA, and there's going to be a real estate section. You know, there's one for home buyers, there's all different kinds, but I'm just concerned with looking at the, you know, the lenders section. Now we can go into rates right here and check what the rate is today. This is going to be really interesting. Actually, okay, it's right here. View today's rates. So you can see that this first part here is for conventional loans. And so if somebody just wanted, for example, the 3% down for conventional financing, the interest rate would be 6%. Okay. And if somebody wanted like 3% down with the help of, let's say, 2% closing costs, the interest rate would be 7.5%. And if you notice, with 3% of closing costs, it's just not available for conventional. Now, I will mention, and this is for, you know, us loan officers, we have to make, you know, a broker comp on these loans. It's not built in with this program or this lender, and with any lender, actually. CalHFA basically will provide this program to us with no broker comp. So we have to charge something. And typically, depending on the loan amount, if it's a larger loan amount, you know, 600,000-700,000, then maybe we'll just charge a point. But normally we would probably charge 1.5 points. So if we're getting 2% covered in the closing costs, that means out of that 2%, our broker comp of, let's say, 1.5% is covered. The other 0.5% of the loan amount goes towards closing costs. So someone is going to need, you know, to have some money to cover the remaining closing costs. I typically, when I put anybody on the CalHFA program, the FHA is way more attractive. It's so just to get the down payment assistance, and let's say somebody has their own closing costs, the interest rate would be 5.25%. If somebody had a little bit of money and needed the down payment assistance and some closing cost assistance, we could go with the 2% on top of that. The interest rate would be 6.75%. And if they needed the down payment assistance and 3% of their closing costs covered, the interest rate on the first would be 7.25%. Knowing that, I'm going to just tell you a little bit how these work. So anytime anybody wants a down payment assistance program, and I'm really condensing all of this because there is just a lot of moving parts to the down payment assistance programs, no matter which one we choose for that client. So the down payment assistance, definitely they get the down payment assistance. Okay, that means the money is borrowed. So it's either going to be 3% down for conventional or 3.5% down for FHA. So so once that down payment is provided, there's a first trust deed mortgage. That's the big mortgage, right? And then the down payment is going to be a silent, what they call a silent second mortgage or a silent second trust deed. There is a 1% interest accrued on that down payment silent second, but there's no payment required. The third trust deed or the third loan is going to be the closing cost assistance. And it's 0 interest, so there's no interest that accrues and there's no payment that is required. So in all essence, you have a first trust deed mortgage, that's the big one, a second trust deed mortgage, that's for the down payment, and a third trust deed mortgage for the closing costs. Again, for the second and the third, for the down payment and the closing cost mortgages, there's no payment required, but interest does accrue on the down payment loan. Now there's discussion. There was like, when it first came out, there was like, oh, you can get 10% assistance and it's forgiven after 5 years. And wow, that's great. That is just fantastic. But guess what? The income limitation is like $62,000. And what can you do with that? So I don't think anybody's going to really qualify with that income limitation. So in any case, and by the way, that is right down here. It says the forgivable equity builder. In my home assistance program, if you click on either one of these, you're going to get the guidelines. Okay, and that's where it's going to tell you what the limitations are and so forth. The other thing is when you go into this part here, you can go into, let's see, there's an income calculator that you can click on that will tell you, like when you click on into the handbook and you go into the handbook, and I have provided these for Kevin, maybe he already gave them to you, for each of these programs. This happens to be for the FHA program, but there's going to be like hyperlinks inside here that are going to tell you what the income limitation is. I'm going to try to get to it here. There's the rate. Here's the income limits. So this one is not the income limit for the 10% money. That's a different hyperlink. But if you notice, like Orange County's 235,000, that's pretty doable. You could probably get somebody into the down payment and closing cost assistance program if their combined income or their total income doesn't exceed 235,000. And San Diego's 211,000. You can check all the counties by going on that hyperlink. Then the other thing, I mentioned about the interest rates. So you can get all this information, including all the guidelines, from this website. All right. But also just know that the buyer must also do like a home buyer class. So anyway, let's see. Let's go back to the, if we could, Kevin, the handbook that I had given you. I'm not sure how to get back to that.
No worries, I can share that.
Okay.
Okay.
And then, if you need more, we have another lender that has the down payment assistance program, by the way. And they have, after 3 years, if you make consecutive on-time payments for 3 years, they will forgive that down payment assistance, but it's only for the down payment assistance. So they're going to have some money for the closing costs. And there's another one that is also similar to that. So we've got 3 different types of down payment assistance programs that are pretty awesome. Not all of them are for conventional or government, but the Cal Halfa pretty much covers it all. So if you could scroll down a little bit, or I'm not sure if I can,
I don't
but yeah. So right here gives all the aspects of the Cal Halfa down payment assistance programs. Another thing that you have to watch out for is the credit score. So, and the debt to income ratio, because for years I've been working with this product and they've always had like a 640 minimum credit score, and also you cannot exceed 45% debt to income ratio.
Wow.
Now, when you can't exceed 45% debt to income ratio, what the heck can you qualify for? I mean, and then you have to meet or not exceed the income limitations. But Cal Halfa changed a few things, which is really awesome. So if you have a 700 or higher credit score, now they'll go up to a 50% debt to income ratio with, of course, a DU, which is desktop underwriting, automated underwriting approval. So we pretty much have to run every single loan through the DU system, desktop underwriting, because that goes straight to Fannie Mae. And as long as we can get an approval on pretty much any loan with a 49.9 or 50% debt to income ratio, and I'm not talking about 50.389, I'm talking about 50.0000, and they're really strict with that.
Wow.
So,
and Debbie, real quick, we have a quick question from Albert, and he's asking, is the 62,000 income for a couple or single person?
Total household total income. Well, you know, that's actually a good question. I'm going to really clarify. Let's say that only the husband goes on the loan and the wife doesn't. Tax returns, 3 years worth of tax returns are required for this program. So let's say the wife earns an income and she's not going on the loan. They take the total income off the tax return. It's the total household income. But let's say that the wife's not working now. So we can just say, well, the wife's not working now. And that was a previous income. You know, she had a baby, she's not going back to work. So there are exceptions to that. Especially with FHA. Also keep in mind with FHA, if you go with the FHA product with Cal Halfa, they will, and this is FHA's rule, they will run the spouse's credit even if the spouse is not going on the loan or on title. I had a conversation with this gal last night till 8 o'clock last night. And, you know, I was telling her that even if she's the only one going on the loan, if she were married, I'd have to run her spouse's credit. She goes, why? Why do you have to do that? It's because, you know, California being a community property state, if they look at certain things on the spouse's credit, not only debt. Let's say the husband had a car payment, but he's not going on the loan. They're going to hit the wife for that car payment on the loan. We have to run the spouse's credit. Let's say they have judgments or collection accounts. Those could result in the house being taken away because, you know, that entity found out, ooh, you know, you own a house now, I'm slapping a lien on your house. So the, you know, FHA is, you know, Federal Housing Administration. It's a government loan and they can make whatever rules they want, and they have. So very good question, but it is the total income of the household. So, you know, if you have a specific situation or you want to market this type of buyer, let me just tell you, not everybody's going to qualify for Cal Halfa products, either their credit score, their debt to income ratio, whatever. But if you market and just, you know, highlight just the tidbits like, you know, down payment and closing cost assistance, don't give any details or anything like that, you're going to get probably just a ton of people calling you, asking you, well, how does this work? That's still going to be a client, whether they qualify for this product or not. Because if you know how to, you know, like refer them to us, we can eventually turn them into a qualifying buyer. We can give them a game plan. We can tell them this is what you're going to need to do. And after we look at their total, the total assessment of their qualifying aspects, their income, time at job, credit score, credit profile, we can help them and tell them specifically, this is what you're going to do. If they need to get their credit score higher, we run a credit report. We also get a credit analyzer with it. So that credit analyzer will not only tell us, but we can share that information with them and send it to them in a report of what they need to do exactly to get their credit scores higher. The tools we have are absolutely amazing. And we could help you guys make more money.
Fine, for sure. And then one other quick question from Albert is he's asking if manufactured homes are part of this program.
That is a good question. And you know what? They used to not be. I know, my God. They used to not be, and I am actually going to have to, well, actually, if you scroll down a little bit, it makes a comment about the manufactured homes, because they used to not be included. No, wait, just go up a little bit to the screen that you were on.
Got it.
But at the bottom of that screen.
Okay.
Yeah, right there. See how it says manufactured homes are eligible?
Yes.
So then the answer is yes. They used to not be, actually. It was only single families and PUDs and condos. But that's another change that they've made, is that they're not only going to 50 debt to income ratio with 700 plus credit scores, but they're now also doing manufactured homes. By the way, condos and PUDs. I don't know if I ever talked about this before, but a lot of realtors don't know this. And I hope there's a lot of realtors on this call, because I'm going to share something with you that hopefully you already know. But if you don't, and I think a lot of realtors don't know the difference between condos and PUDs, because what I see on ads is, and you're advertising, and maybe that's what the MLS is allowing you to put in. They don't allow you to decipher whether it's a condo or a PUD. Just, oh, it's a townhome style home, or look at this beautiful townhome. That's not a legal description. So that townhome, and I used to live in a townhome in Mission Viejo, and it was 2 stories, actually 3 stories, if you count the garage. So 3 stories. And was it a condo or was it a PUD? That particular townhome was a PUD. And that stands for planned unit development. That's different than a condo. A condo, actually, you only own the airspace in the condo. The PUD, so with a condo, you don't own the land beneath the condo. You don't own the structure. You only own the airspace in the condo. PUD, planned unit development, could look like a townhome. It could look like a condominium, but it's different. You don't just own the airspace in the condo or in the unit. You own the land beneath and you own the structure. So the reason why I'm bringing that up is because FHA, if you have qualified somebody FHA, and let's say it's in the condo range of price point, you want to make sure that that condo development is FHA approved. And you can just Google FHA approved condos and it'll take you to the HUD.gov approved condo link. And you can check what developments are FHA approved. But here's the cool thing. If, let's say, the realtor doesn't know if it's a condo or a PUD, and believe me, even the most experienced realtors don't know the difference, but check it out on like a title program to see if it's zoned as a condominium or a single family or a planned unit development, even if it's attached. Because if it's a PUD, then it does not, the whole development does not have to be FHA approved. And I just had a realtor get kind of freaked out about doing an FHA loan, actually it was a reverse mortgage on a manufactured home. And he's like, but the whole tract is not FHA approved. And I'm like, it doesn't have to be. So for manufactured homes, detached homes, and PUDs, the whole development does not have to be FHA approved, only condominiums. So you really have to see what the legal description is on that property. And I hope I might have taken over the time that you guys have. So I think Kevin's going to post my number, or have any other questions, let me know.
For sure. No, we really appreciate all of this. And this is, we, as usual, these webinars are meant to just, enlighten you, but really, when you have the questions, the best thing to do is to contact one of the reps of Clearview Mortgage. I'm going to make sure that everybody has Debbie's information when I send out the replay. And the other thing is next week, I think we're not going to be having a webinar, so we'll be taking the week off. So I hope you guys enjoy the week next week. And if you want this particular PowerPoint, just send me an email, kevin@altarealtygrp.com. This is a really big file, and so I don't think that I can get it into the automatic system. So again, if you want this graphic, just send me an email and I'll reply back with the graphic.
Thank you guys. Thank you, Kevin, for having me on. I hope to hear from you guys.
Heck yeah, Debbie, thank you so much for having us. And agents, get out there and make it a productive week and a great week. And we will see you guys in 2 weeks on the webinar. Have a nice day.